Hello and welcome to our weekly look ahead at the markets, and just a quick recap really on November. It's obviously been a superb month for the market. We saw the Nasdaq rallying almost 11% for the month of November. The S&P 500 and the Dow were both up almost 9%. So they had their best month since July 2022. We also saw European shares having their best month since January. The DAX up sharply around that 9% level, and 9.5%. The CAC up about 6%, and FTSE also making some smaller gains. Some weakness in oil prices. We'll come on to that in a moment, but some weakness in oil prices, maybe just weighing a bit on those oil majors as well. And global shares across the piece had their best month in quite some time. So it's been a really strong month for stock markets. It's also been a really good month for bonds. I think bonds had their best month in about 35 years. So a very sharp repricing in the bond market. That has seen yields come down very sharply. That in itself is a sign of the volatility, the inherent volatility that we still have in fixed income at the moment, as the market tries to play the Fed and second guess where the Fed is going to go next. And really the narrative through November was very much one that the Fed is now done and that the next step will be to cut. Also signs of cracks in the labour market. That'll be important coming up this week with the non-farm payrolls due up. All that feeding into this idea that the Fed is now very much done with hiking and the next step will be to cut. So the market now pricing in quite aggressively for cuts in 2024. I think about a full 100 basis points of cuts for the ECB and something similar for the Fed. So the market really is assuming that the Fed and the ECB and no doubt the Bank of England will be cutting quite a lot next year. That maybe assumes that there's going to be a bit of a sharp decline in growth and also in earnings. So keep your eyes on the sort of PMI surveys that are going to be coming out over the next couple of months. They're going to be important as well. But this week we have the non-farm payrolls, as I said earlier. That's up on Friday. That's going to be important. It came in quite weak last time, 150,000. So that fed into that narrative that there's just maybe some signs of cracks in the labour market. Also downward revisions to the prior 2 months. Wages also not that strong. Unemployment remains pretty low. That very low because we are in a secularly tight and structurally now, I believe, tight labour market. And they're just not the workers available. So job openings remain quite high. So keep your eyes on those JOLTS job openings, about 9.5 million or so. That sort of level of job openings keeps the labour market tight. And then, of course, there's the ADP numbers. They'll be up ahead of the non-farm payrolls. It can be a bit wayward, though, so maybe there'll be a bit of a discounting of those. Weekly unemployment claims and initial claims and continuing claims continue to be looked at. We did see those continuing claims last week move higher. That indicates that people are finding it harder to get a job. But the initial claims were pretty steady, which means or suggests maybe that the employers are not really firing people, so they're holding on to people, but they're maybe not looking to grow and not looking to expand their workforce. That's sort of the narrative that we're seeing. That does point to that sort of slowing in the non-farm payrolls number. As I said, 150,000 last time. I think if we see a number below that this time, then that's going to be seen as further signs of cracks. But we also have the rehiring, I think, of the UAW workers, the strikes that were taking place. So that's going to feed into it. So it's going to be a messy number. So it's going to be hard to read. But I think the narrative remains the same, and that is the narrative driving the market is that the Fed is done. The barrier to more rate hikes is extremely high, although San Francisco Fed President Mary Daly last week saying that they're not certain that they're done. We had that fireside chat from Jay Powell as well. But we're now into blackout period for the Fed ahead of that December 12th, 13th meeting. We've also got ECB coming up as well later in December, Bank of England. So lots of key central bank meetings. So the data this week is going to be very important. Elsewhere, RBA meeting likely to be on pause. I think Bank of Canada as well. So they're sort of slightly outliers in terms of where we're at with the Fed and the ECB, not necessarily pointing in the right direction there, but they're looking like they're on pause. Inflation in Australia has come down quite a bit, so they can rest on that outlook. And then keep your eyes on the oil market, of course, because we did get that OPEC decision to extend the 1.3 million barrels per day of cuts into 2024. Russia taking a bit more of a hit, and also some other members joining in to add another 900,000 barrels per day of cuts. So over 2 million barrels per day of cuts. But individual members are going to announce how they're feeding into that in due course. So it's not the most coherent outcome from an OPEC meeting we've ever seen. Oil prices had initially rallied a bit on the bigger cut, on the extension and deeper cuts, but struggling to hold any ground. When the market looking at OPEC struggling to maintain discipline, and also struggling really to swing the market in a way that might have done in the past, because it accounts for just 40% of global oil output. You've got US output at record high, 13.2 million barrels per day last look. Guyana and Brazil also pumping like mad. You've got Iran increasing exports. You've got Iraq as well also doing the same. So there's lots going on there, and OPEC struggling to maintain a grip on oil prices. But weaker oil prices could mean lower inflation. That'll help the central banks. But there is some sense that inflation could pick up early in 2024 as countries remove energy price caps and so on. So there's lots feeding into this inflation data. It's not necessarily just raw fundamentals, and we'll see if there is an uptick in inflation at the beginning of 2024. That could be that sort of narrative change up that we're always looking for. But for now, the narrative remains that the Fed and the ECB are done, and that they'll be looking to cut sometime in the first half of next year. So we're looking to see if that narrative changes in the next week or so. That's it for now. Thanks for watching.